What's going on, guys, and welcome back to the channel. Today's video might be the most important video I have on my channel so far. Now, granted, I don't have a tremendous amount of videos. However, this one is super important. So I mentioned back in my previous video, going over, a couple of things you should do before the age of 25. One of those things was building your credit score to above a 700 credit score. In that video, I promised I was going to make a specific and step-by-step tutorial video on how to build your credit score. So you probably guessed it, in today's video, we're going to go over those tips, tricks, and necessities that is going to build your credit score super fast. They're actually honest and true ways to do it. And in addition to that, they're ways that I've done it before. I've personally grown my credit score to the high 780s, and I've done it extremely quickly. So to start off the video, I wanted to kind of talk about my credit journey and what's brought me and led me to having the credit score that I do. Now, to start off, I do have a good amount of credit cards, and all these credit cards have a purpose, and there's a reason why that I have many of them, and we'll get into that further in the video. Now, my credit card journey started when I came across a YouTube video going over credit card churning. Now, if you don't know what that is, I highly recommend after this video to type into Google credit card churning and just kind of get into the rabbit hole and figure out what that is and what it entails. I'll give you a brief synopsis. Essentially, what it entails is you'll be able to get credit cards and leverage their luxury points, miles, and credits that credit card has and their bonus categories to basically travel the world for free, getting free nights in hotels, luxury stays in hotels, and many other things. This is partially the reason why I was able to go to New York with my girlfriend to take her for her birthday. With the credit cards that I had, specifically the American Express Gold Card, which we'll get into that later, is essentially what led me to get that hotel for free that we actually stayed at for 4 nights. In addition to that, these credit cards and the points that I've gathered actually helped me pay for the majority of the plane trip there and the plane trip back. So the great thing about that is the majority of our trip was basically free just by owning a specific credit card and having a certain amount of points. However, it was kind of a long journey to get to that point. Of course, this video isn't really how to leverage these credit card points and all that good stuff. That's for further, a little bit more advanced video. However, that's kind of where this process has led me. And so it's a great journey. It's really fun. I love the hobby of credit cards and things of that nature. But to begin with, in order to get all these luxury credit cards and stuff that get all these perks and great hotel visits and free luxury things, essentially you have to start somewhere. And for me, I didn't really have a great credit score when I first looked into this, and I didn't have a sufficient history as well. Now, with that being said, this video, guys, is going to be your step-by-step Bible, if you will, on literally how to get your credit score to the high 700s all the way up to the 800s. And I guarantee you that if you follow these steps, step by step, you're going to get there. And so without further ado, let's jump right into the video. So to start off, let's talk about how your credit is actually calculated. Now, the first thing that goes into calculating your credit score is the length of your credit history. This is going to allow you to be less of a risk to credit card companies, to banks, to lenders that are trying to either rent you out a property, get you a loan, or for you to sign a lease on an apartment. By the way, guys, I highly recommend to stay to the end of the video. I'm going to be going over myths and debunking them about credit cards and some really important things you need to know. So if not staying through the whole video, at least fast forward towards the end so you can actually see these myths, because it's going to help you build your credit score as well. Now, the second and really important factor of how your credit card score is calculated is your credit card utilization rate. Now, what this rate entails is how much available credit you have versus how much you're actually using. Now, what you want to have is a low credit card utilization rate. Essentially, you want to use as little as possible of the available credit you have. This shows credit card bureaus and banks that you are less risky because you have a lot of available credit. However, you're only using a small portion of that available credit. Therefore, you want to keep your utilization rate lower and use the least amount of available credit that you have in order to keep that utilization lower. The next thing that goes into calculating your credit score is the diversity of your accounts that you have open on your credit line. So essentially, there's different accounts, right? There's a credit card account, there's a loan for your home, there's a lease payments that you pay for your apartment. Essentially, banks want to see that not only are you good at paying off your credit card on time, they want to see you're good at paying off your mortgage on time, or your lease or your rent on time for your apartment. And essentially, this kind of goes a broad spectrum of what accounts you have open, what accounts are you also responsible for, and have you also been paying these accounts on time along with all the other accounts. And the last thing that goes into calculating your credit score is, of course, hard inquiries on your credit score. This is essentially where lenders and apartment complexes, look at your credit score in order to see if you've been paying stuff on time, you're responsible with your credit, and how high it is. However, don't worry about these credit card inquiries. They really don't affect your credit score, and they're really a short temporary effectiveness on the credit score. Usually it takes about 6 months to really get rid of, essentially if it went down 2 points, 3 points, it takes about 6 months for this stuff to go away. So now that we got how your credit is actually calculated, what everything goes into it, let's talk about some of the steps to get you to that high credit score. Now, the first step you want to take in order to build your credit score is applying for your first credit card. Some of you already have a credit card. If you don't, however, this is what you need to be doing. Go to your local bank or go online and apply for a secured credit card line. Now, you're probably asking, what's a secured credit card? Essentially, what a secured credit card is when you're going to be going to the bank or going online and giving the bank $200 to $500 is what I recommend of cash or available money on hand that you have. And that's going to go as a secured deposit, okay, a credit line deposit to the bank. And so now they're going to in return give you a credit card with the amount of money you gave them in cash. So if you ever miss a payment or if you ever don't pay something on that credit card, they have your deposit in order to pay the credit card off. So this is a really low risk for the bank. Therefore, this is why they want to give you this credit card to help you build your credit score and build your credit history. Now that you have this credit card, this isn't your time to go spend stuff that you normally wouldn't spend. This credit card is something you want to use for very small expenses. Things like fast food, gas, your Starbucks. You want to keep it very minimal, and you don't want to have a huge balance on it to pay it off every single month. Now this goes into my second point. When you get a credit card or a secured credit card, you want to pay off the balance in full every single month. You want to use this credit card as you would a debit card or cash. You want to pay it off in full every single month. Don't overextend yourself and do not leave a balance on your credit card. Okay, perfect. Now that you've built up about 4 to 6 months of credit history of you paying off that secure credit card on time every single month, the second and important step of building your credit score is applying for another credit card. Now, for the second credit card, I recommend going to Discover or to Bank of America and just get a simple credit card, something where it's a simple cash back. This is going to really help you build your credit score. It's going to increase the amount of accounts that you have, which is good. And it's also going to increase your utilization rate, where you're going to have more available credit and you're going to use less of that credit, which builds your credit score even higher. Now, again, you have to be responsible with this credit card and the available credit that you have. This credit card is also going to be used for minimal expenses, things at the grocery store, things like gas, things like fast food, whatever it may be. Make sure it's minimal. Make sure it's stuff that you would normally spend in cash or on a debit card. And also, you're going to pay this off every single month in full. Now, you have about a year to a year and a half of credit history of on-time payments. The next thing I recommend you do, which is the third step, is apply for a credit charge card. Essentially, what a charge card is, it's a little bit different than a credit card. This is a card that actually doesn't have a preset spending limit. Now, I know it sounds dangerous, but it doesn't mean you can go spend $1 million on that credit card. This card is going to be just like a credit card, except you have to pay it off every single month, which is no problem to you because you've been doing that. Now, these charge cards don't actually have a preset spending limit like I mentioned. So with that being said, on your credit card report, it's going to have no effect on your credit card utilization rate. Essentially, it's going to see that you're paying off this random credit card with no utilization, no preset limits. It's going to just see that you're paying it off in full every single month like you've been doing. So your credit card score is going to go up because you have more accounts open. It's also going to go up because you're spending another credit card on time every single month in terms of paying off the payments. In addition to that, these credit cards are usually the ones that have more luxurious perks like points and airline miles and status, hotel status and things of that nature. Now, I personally have the American Express Gold card for my charge card, and I love American Express. These are the ones that you start getting into the more luxurious perks like I mentioned. This also helps build your credit score. When you start kind of doing some research on these credit cards and these charge cards, they give you a lot of perks, and you can really leverage these perks into getting more airline miles, flying for free, getting hotel stays for free as well, and a lot of other things. However, look out for a separate video on that, on how I leverage my American Express charge card, how I leverage other charge cards, and essentially what that entails and the benefits that I get from these cards. All right, perfect. Now that we have the 3 steps out of the way and you actually follow these, you're going to build your credit score. Let's go into some myths about credit cards and let's debunk these myths. Now, the first myth about credit cards that we're going to debunk is closing your credit cards that you don't use anymore. This is extremely wrong, and it's far from the truth. You never, ever want to close any credit card that you've ever opened. You want to leave it open for the rest of your life. Now, how do you keep your credit card open for the rest of your life? Well, number one, don't close it. Number two, you have to use it at somewhat of a consistent basis. I recommend if you have a credit card, keep it in the drawer or keep it in your wallet or whatnot. Maybe you don't use it often, but you need to start using it every 4 to 6 months. I recommend, because the credit card companies can actually close that credit card due to inactivity because they're worried maybe it got lost or maybe you're not using it, and they want to minimize their risk if you're not going to use that credit card. So with that being said, always keep your credit cards open, keep them alive by using them every 4 to 6 months. The second credit card myth that we're going to debunk is checking my credit score will hurt my credit score. This is completely wrong and it's far from the truth. I personally check my credit score on Credit Karma. I love that app. They have a really good, seamless, simple app to use. Gives you tips and tricks on how to build your credit score based on your actual credit card profile. I check it about once a month, sometimes every 2 to 3 weeks. Essentially, it just kind of gives you detailed analysis of your credit score. It gives you the actual number of your credit score, and it doesn't hurt you at all to download the app. It's completely free. It's great, useful tips and tricks. It's extremely vital to your credit card success, and it doesn't hurt to check your credit score. That's 100% a lie. The third credit card myth that we're going to debunk is if you leave a credit card balance and pay it off little by little, keeping some balance, keeping some interest for the bank, they'll like you more, and in return, they'll increase your credit score faster. That's 100% false. Do not keep a balance on your credit cards. Pay them off every single month on time, in full, and do not leave a balance. It's going to overextend yourself possibly. It's also going to show lenders that you do leave a balance, which usually means you maybe don't have enough money that month to pay it off, and therefore you're going to be a little bit more of a risk. So it's far from the truth that if you leave a balance, you're going to build your credit score faster. You got to pay it off every single month. Don't overextend yourself. Don't get yourself in a habit of leaving a balance. The fourth and possibly the biggest myth is having a lot of credit cards is going to hurt you and it's bad. This is actually the total opposite. Having more credit cards is going to actually increase your score than having less. Why? It's because if you have more credit cards, you have more available credit to spend, which means you're gonna have a lot of available credit with all of these credit cards open, and you're only gonna use a small portion of this available credit, which increases your credit card utilization rate. In addition to that, it also increases the amount of accounts you have open with lenders, which shows flexibility and diversity around how many accounts you have open and how many accounts you're responsible for, and each of these accounts are paid off on time, in full, and without any hiccups. So there you have it, guys. I hope this video was extremely useful to you. Even if you have a somewhat built credit score, try to follow some of the steps in here. Please, please, please send this video to somebody that is young, 18, 21, 23, and doesn't have an available credit, doesn't have a credit sufficient history, or have any credit cards, or they think credit cards are bad, or they think you got to stay away from building credit. Guys, please send this video to family members, friends. It really helped them out, and I hope you apply this to your life as well. Thanks for watching today, and look out for some more content just like this on MyRick TV.